So if you saw on the daily chart, the Nifty did a strong rally from around 20,315 level. After that, we saw sharp rally, and coming days Nifty is sustaining near 23,500 level. So what next? So what next would be the key question from here on. So till now Nifty is sustaining about its 50-week exponential moving average as well as 50-week 50-day moving average as well. So important support zone for the Nifty, for I'm talking about short-term traders, and after that we'll discuss investor strategy. So on traders, if you see, so major support would be placed at around 23,100. If it reaches below that level, then only we can see some further correction in the market till 22,700. 22,700 will be the major support zone for the market in the medium term, and immediate resistance zone for the market would be 23,800. You see, this stop will act as a major resistance zone for the market from here on. If it sustains about this level, then Nifty will move towards 24,250 in the coming days. I'm talking about next month view at next month view. So 24,250 level would be the trend reversal level for the Nifty. If it sustains about that level, then trend will change from neutral to positive, and after then we may see some fresh buying in the Nifty towards 24,800 and 25,500 level. So levels to watch on a Nifty is a resistance zone is placed around 23,800, followed by 24,250 in the coming months, and support placed at around 23,100. Below that, 22,700 will act as a zone for the market in the coming months. For investor point of view, if you see, so immediate support zone for the Nifty would be 22,700. Below that, 22,000 and 21,800 zone will act as a major support zone for the market, and which was a previous recent low as well. Major resistance for the long-term investor would be 24,250, which is a trend reversal level as discussed, and above that Nifty will move in a bullish zone. So for investor, if investor want to enter in the market, so first entry point for the investor would be if Nifty on a deep below near 22,800, below that 22,000 level will be the good entry point on for the investor. Or if Nifty sustains about 20,050, then we can enter once again on a long-term investor purpose. So this is a Nifty view. Now I'm talking. Let's move on to the Bank Nifty. So if you see Bank Nifty actually outperforming the benchmark Nifty here, clear cut, and Bank Nifty actually trading near its 3 months high level. And on the weekly chart, if you see, Bank Nifty is currently sustaining above its previous high as well. So Bank Nifty is currently placed at around 51,575. Now the immediate hurdle for Bank Nifty is 51,150. If it sustains above that, 52,150. If it sustains above that level, then Bank Nifty will move towards 53,800 level. On a lower side, Bank Nifty has a major support placed around 50,500 mark. As far as the broader market, if you see, so Nifty mid cap and Nifty small cap, so both these indices currently trading below its average. Trend is weak on a broader market till now. So we have to focus on large cap sectors, large cap and Bank Nifty. So we have to wait and watch for mid cap for long term entry. But yes, short term there is on a weekly chart if you see. So on a weekly chart, mid cap 150 is sustaining near its 5-week high. So on a investment, we can enter in the mid cap and small cap. And if you talk about Sensex, so Sensex you see on a monthly chart. So Sensex is actually replica of Nifty here. So Sensex is also near its previous month high, and on a weekly basis also it is sustaining about its 3-week exponential moving average. So Sensex has an immediate resistance placed at around 80,000 level, and above that 82,200 mark, and support placed at around 75,500 level. Now let's look at the sector outlook. So we'll discuss about bullish sector or positive sector as well as negative sector as well on a technical basis. So on the basis of positive sector, first sector would be Nifty Financial Services. It could be a potential bullish sector in the next month. So here we can see here financial services sector is trading near its life high level and showing robust momentum here and actually gap up opening in current week as well. So Nifty Financial Service is a bullish sector. Next sector would be Nifty Private Bank. Here also we can see a height of higher bottom formation on the weekly chart and sustaining about its previous swing high as well. So next of the bullish side is Nifty Private Bank. Then if we can see a Nifty Metal. So here also bullish activity is seen, and if you see a monthly chart of the Nifty Metal, so here also you can see a Nifty Metal is sustaining at 3 months high as well, and on a weekly basis also sustaining about 50-week exponential average. So Nifty Metal would be the next sector on the bullish side, and lastly, Nifty Healthcare sector also showing bullish trend on the monthly basis. If you see, metal is corrected, shallow retracement in the Nifty healthcare sector. See, 23.6% retracement has happened on a monthly basis, and on the weekly chart, it is sustaining above its 50-week exponential average, and it's trading in a. So all these sectors on a bullish side for the next month, and the very sector, if you talk about, so first sector is actually underperforming, which is a Nifty FMCG. Here we can see a clear-cut downtrend has happened. It's continued downtrend, and since last 4 weeks, it is in a range-bound situation. However, if it sustains above level of 53,000, then we may see some bounce back in the Nifty. Till then, it is actually an underperforming sector. Next underperforming sector would be Nifty IT here. So Nifty IT is sustaining below its 50 potential moving average, and actually it is taking a strong resistance of its downward sloping trend line as well. So we have to wait and watch for IT counters till now, and don't enter at this juncture in the IT sector because it is a clear-cut downward trend and no reversal has happened till now. So lots of clients as call and asking about we can enter into IT sector. So we advise him that don't enter at this level because we need some reversal in the chart. Next underperforming sector would be Nifty Auto. So here also we can see a clear-cut downward move in the Nifty Auto, and RSI, if you see, RSI relative strength of the Nifty Auto would be near its 40 level, and it is moving in a downward territory, downward side. Clear-cut underperformance the auto sector, and lastly, if talk about bearish sector would be energy. So since last couple of weeks, you can see some kind of bounce back in the energy, but major trend of Nifty energy is on a downward side, and it is sustaining below its 50-week exponential average as well. So bullish side, we talk about Nifty Financial Services, Nifty Private Bank, Nifty Metal, and Nifty Healthcare. On a bearish side for the next month or underperforming sector would be FMCG, IT, auto, and energy. So that's all from my side. Thank you.
So thank you, Vidnyan sir, for this update. Now we will move forward towards the fundamental part. I am sharing my screen for the presentation. Just a minute. I hope my screen is visible.
Yes, it is. Sanket, can you
So
hear
first
us?
of all, I
Yes,
would
it
like
is
to.
visible. Yeah.
So first of all, I would like to thank everyone for attending this call and Second of all, given in the last week, we saw positive trading sessions as FIs has been entering in the market again. So we have been seeing a greener side of our portfolio. So I would like to congratulate everyone, kind of thing. Like we are seeing some positive trends in the market now. So first, moving forward, so I would like to start with the highlights that happened in the month of March. So first of all, as of today, as President Donald Trump has signed a proclamation to impose 25% of tariff on auto and auto components in order to boost the manufacturing jobs within US. So this tariffs will be going from effect from April of 2nd, 2025. So this, as a result, we saw a negative trading session today for the automobile companies such as Tata Motors as well and Eicher Motors and auto components such as companies such as Sona BLW. We saw a negative trading session for these companies today. Given these companies import their products to the United States and they might face 25% tariffs, which will impact lesser demand, which will impact the demand for the products in the United States. So the next update is that Trump has threatened approximately 25% secondary tariffs on the countries that buy oil from Venezuela, which is a Latin America country. Given the company has been the United States has been facing issues with the Venezuela. As a result of this statement, we saw that Reliance Industries has halted its purchase of Venezuelan oil, given these tariffs might impact India as well. So these two were the key highlights that happened this week. Next thing, we saw that in the past few trading sessions, rupee gained by 2.5% from its all-time low of 87.95 in February 10 on February 10th. This happened due to the RBI's intervention to improve the liquidity in the market by buying and selling USD INR swaps, which helped the rupees to gain to appreciate over the last few days, and it reached 85.78 as of today, which indicated that rupee has been gaining strength, and as a result of this, FI has also started investing in India again. So the next pointer, we saw that India's retail inflation data came up for the month of February. So retail inflation has been measured by Consumer Price Index, that is CPI, and it was at 3.61% in February month, which was lower compared to the previous months of 4.31% and 4.21% of February 2024. So this indicates that the inflation in India has been decreasing. This was primarily due to lower inflation on the food side. We saw that some of the food products got cheaper, which benefited the CPI index as it came down to 3.61%. So the next fifth point, we saw that metals gained over the last few days. This was primarily due to the DGTR's recommendation of 12% provisional safeguard duty on steel imports. The DGTR has been doing this to curb the rising cheap steel imports from China and protect the domestic steel industry. We saw that in most of the steel companies posted negative degrowth in their revenues and impact on the margins due to this import of cheap steel imports from China. As a result of this, the Directorate General of Trade Remedies has recommended that India should impose a 12% provisional safeguard duty in order so that the steel companies in India can benefit from it and can rise again and improve their profitability and top line growth. So this has been benefiting the metal stocks. We saw that Tata Steel, JSW Steel has been increasing over the last few days. So the next update is the US Fed has kept their interest rate unchanged on the backdrop of potential rising inflation and a slower growth, primarily due to the rising tariff hikes. They have also revised the inflation data and GDP forecast for the calendar year 2025 at 2.7% and 1.7%. So this is primarily due to the US Fed has been expecting a inflation kind of setting in due to the tariff hikes, which might increase the prices of products within the United States, and it might impact the consumption of such products that are imported in the US, as US imports majority of the products. So as a result of this, inflation might hit again, and as a result, US Fed has lowered their inflation and GDP forecast for the calendar year 2025. Today, one more update we got that in terms of GDP only for US. So US posted a GDP of 2.4% for the 2.3% for the Q4 of 2020 previous year. So this was a lower compared to the Q3 of 2024, which was at 3.1%. However, it was better in terms of consensus estimate, which was at 2.2%. So we can see that the GDP has been decreasing on a quarter-on-quarter basis, as the US Fed has been expecting that this is primarily due to the inflation. So that was the key highlights that happened in the month of March. So moving forward to the next slide. So in this we can see in the recent past 3 months, the FIS activities has been the net outflow of the FIS has been decreasing over the last 3 months. So we can see that in the month of January, the net outflow was approximately 72,000 crores, whereas in February month, it came down to 46,599 crores. And in the month of March, as of date, the net outflows was at 2,500 crores. So this was primarily due to month of March. We saw that FIS coming back as most of the stocks were trading at a fair to cheaper valuation, and plus there was a short covering of the positions of FIS. So this led to net increase in inflows from FIS. So we saw that over the last 3 months, overall inflows has been increasing, which led to the net outflows coming down over the last 3 months. So this indicates that we saw that the market trading on the positive side over in the last week and in the current week. On the next chart, we can see the index valuation chart. So if we remember in the last market outlook session, we saw that Nifty 50 index was trading at a valuation of approximately 19.1 to 19.2 forward P. However, in the month of February, it came down to 18.6, which is closer to its fair average historical valuation of 18.7. This indicates that most of the companies listed in the Nifty 50 index are trading at a fair valuation currently, as we saw that the forward P came down from 19.2 in the month of January to 18.6 in February month. So this indicates that approximately Nifty 50 is currently trading at a fair valuation. On the next chart, we can see that the Nifty Midcap 150 index forward P is currently trading at 27.3. Despite it is trading above its average P of 24.6, we saw that in the month of January it was trading close to 31 times of P, and we can see that it has been decreased to 27.3 P in the month of February. So this is a positive side, as the valuations has been correcting and we can see that most of the mid-cap companies are also coming down to its fair valuation. And as a result, this showcased in the month of March, we saw that FIs has been coming back, and this is further proof that the valuations are been coming down for the most of the companies listed in the Nifty 500. Next, on the next table, we can see similarly in the next table, we can see that Nifty Small Cap 250 Index forward P has been trading at 20.3x. Despite it's been trading at above its historical average of 17.2x. It has been lower compared to the month of January, at which it was trading at 23x. So it is a positive sign again that small cap stocks are also coming down to its fair valuation. So again, we believe that most of the stocks listed in the Nifty 500 are been corrected and are trading at the fair valuation. There are still some stocks that are trading at a higher valuation, and we might see some impact in the coming few months and should expect some volatility as the valuations are still at an elevated levels. On the sector sides, as Vidnyan sir mentioned in his outlook, that banking and financial services have been strong, and we can see that in the fundamental side as well as and we saw that in the banking side that more in the last few trading session, banking and financial services stocks picked up again as they were trading at a lower valuations compared to the historical average, and most of the investors are overlooking this point that banking and financial services were trading at low, cheap valuations, but no one invested in this sector. However, we can see that investors gaining back and again investing in this sector. Plus, the RBI has been intervening a lot in this sector by reducing tax rates, reducing interest rates, and improving the liquidity in the market. As we saw that last month, RBI lowered the risk-weighted assets for NBFCs in order to improve the liquidity in the market so that they can lend more. So we saw that we can see that in banking and financial services sector. So we are positive for banking and financial sectors in the upcoming few quarters and upcoming for the longer run. We are positive on the private bank, especially on the private banks, as most of the private banks are lowering their NPAs and improving the liquidity. So we are positive for the banking and financial services sector as well. The next sector we believe to watch out for is travel and tourism, especially the hospitality sector. Then traveling sector, what do we say? Interglobe companies such as Interglobe Aviations, Indian Hotels, then BLS International that provides visa services. Companies such that should benefit from travel and tourism, boost in the travel and tourism industry. As most of the companies in the hospitality sector are experiencing supply-demand gap, that there is a lot of demand in the market, however, the supply is less. That's why we can see that companies listed in the hospitality sector are investing more, doing more capital expenditure, renovating their hotels in order to get more customers and increase the number of footprints. Quarter-on-quarter growth, as most of the companies listed in the hospitality sector provided good set of third quarter results, and we believe that in the upcoming quarters they should continue to post better results on the backdrop of supply demand gap. In the next sector we are bullish on is the consumption sector. So as we know that that tax rate income tax rate has been income tax rate slab has been increased to 12 lakhs. This might push the consumption sector in India. Companies such as Blue Star, Voltas, even in the should benefit from such tax cuts given the increase in consumption from from the increased saving from the Indian customers. So we are bullish on the consumption sector, and we believe uh, consumption sector to perform well over the upcoming quarters. Similarly, on the metals sector, we believe, as we saw that government is planning to add an additional 12% safeguard import duty, and plus the infrastructure demand in India is growing, so we might see the demand for metals to increase as well. So we are bullish on metals sector as well on the backdrop of this too, and we should see positive upcoming quarterly results. Once this safeguard duty has been imposed, which will take some time. So we might not see the impact of that in the next quarter, but it will take over the next 2 to 3 quarters. We should see a positive quarter growth for the companies listed in the metal sector. The next sector we are bullish on is the healthcare sector. So healthcare sector, most of the companies listed in the healthcare sector are mentioning that the demand for hospitals has been increased given the lower amount of healthcare facilities present in India and the rising cases of diseases in India due to the poor day-to-day life of common people. So the healthcare sector is benefiting from this, and we can see that most of the companies in the healthcare sector has been doing capex and increasing their hospitals within India. They are either doing greenfield projects or acquiring smaller companies, smaller standalone hospitals in order to expand their geographic presence and cater to more demand, cater to more public in the different geographic locations. So these were 5 sectors which we are bullish on. However, there are some sectors which believe we should be cautious on. The first is the information technology, that is IT sector. So we believe that IT sector is currently facing headwinds. The number one reason will be the generative AI, which most of the people are talking that services sector, services, companies such as Infosys, TCS, Wipros are being facing lower order given the use of AI, as AI has been solving most of the services that IT companies have been providing. So this has been impacting the IT companies as the order book has been not growing at that pace, and we are seeing mid single digit growth for IT sector. However, these companies are trading at a higher valuations, which we believe is not suitable for a company that is growing at a mid single digit growth. So and the next point we believe that IT sector companies are facing is the tariff hikes. So this might impact the revenue generated for the IT companies that provide services in the United States. So these two are the factors that have been impacting the IT sector's company. And as Vidnyan sir mentioned, that IT sector is also looking technically weak. So we are we believe that it is better to be cautious and avoid the IT sector for now, and wait for the next 2 to 3 quarters and wait for the outlook that the management of the companies present in the IT sector provides. The next sector we believe to be cautious on is the FMCG, that is the fast-moving consumer good. So companies such as Britannia, Dabur, Britannia, Marico has been providing a weak sentiment given the weaker demand in the urban sector. However, the rural sector is strong, but most of these companies generate revenue from the urban sector, and urban sector has been showing weakness in sign. Primarily, this is due to that was inflation that happened over the last in 2024. Plus, the unsecured credit growth was halted by RBI, as we saw that microfinance sector faced backlash, as most of the microfinance companies were providing loans to individuals with poor credit quality as well. So as a result of the halt in microfinancing, the urban demand was impacted. So as a result, FMCG sector is currently weak, and we believe this to be over this to be weak over the next few quarters. As a result, we believe to avoid the FMCG sector overall. On the automobile side, we believe that passenger vehicles and commercial vehicles both are facing a bit of uh, demand degrowth. As I mentioned, that urban sector demand has been weak, which is impacting the automobile sector as well. Plus, with the commercial vehicles segment is also weaker, and we saw that in the results of Tata Motors as well. And we should expect this is a cyclicality, so we should expect negative results from companies in the passenger and commercial vehicles over the next few quarters. However, companies such as Mahindra and Mahindra, they are providing a better set of results given the presence in tractors as well, agriculture side, which is seeing a good demand. So this is offsetting the company's negative commercial vehicle segment growth. So there are positives and negatives in the automobile sector. So we have to be selective in terms of the companies we are looking for in the automobile sector. In the next slide, as I mentioned that this is the valuation chart for private bank and healthcare. So as we can see, in the month of February, the valuation of private banks, that is price to book value of the private banks, was lower at 2.2x compared to its historical average of 2.5x. And we saw that it peaked, the valuation of private banks peaked in 2024 at 2.5x. So most of the companies, as a result, as we know that FI has entered in the month of March, given that the lower valuation of banking and financial services. And we can see here as well that private banks are trading at a lower valuations compared to the historical average. Similarly, on the price to equity ratio as well, we can see that the private banks have been trading at a PE of 16x compared to its historical average of 20.7x. And we can see that most of the investors have been avoiding this cheaper valuation. As a result of this, we saw FIs inflows in the month of March. On the healthcare segment, we can see that the healthcare segment is currently trading at a PE of 28.7x, which is slightly above the historical average of 27.7x. I believe that this is a fair valuation. If we look at the historical rate, usually the healthcare segment stocks has been trading at a valuation of between 27 and 31x on an average. So we believe that this is a fair valuation, and we can invest in the healthcare companies as well at this valuation also, given the increased capital expenditure by the companies listed in the healthcare segment. So there are few key updates that we have to look out for in the month of April. So the first I would say is that on April 22nd, Mr. Trump, which he has dubbed it as a Liberation Day, so he will be imposing some of the tariffs, such as the auto tariffs on auto sector, which we saw today. So he will be imposing that from April of 2nd. And the reciprocal tariffs that he has been mentioning, that he will be reciprocating the tariffs that the other nations have been imposing on US. So these are the two tariffs that we will be seeing on the April 2nd. However, there is a positive note that he hinted that he might provide some concessions to certain countries on basis of the reciprocal tariffs. So this is a positive side, and we might see India to benefit from this as well, given a strong relationship with US. The next key update we have to watch out for is the RBI MPC meet, which is expected to be held on April 7th and between April 7th and April 9th. So we are expecting that RBI should RBI should cut down interest rate on the backdrop of lower inflation data over the past 2 months. So this might we might see another rate cut. We already saw 25 bips rate cut in the month of February. So another rate cut of 25 bips is expected to be happening in the month of April. This should further benefit the banking and financial services stocks. As I mentioned, this is a positive news for the bank sectors, stocks, companies listed in the banking and financial services. The next key update we have to watch out is for the CPI and WPI inflation data, which will be happening after the RBI MPC meet. So it is anticipated that the inflation should stay between 3.5 to 4% in the month of March, which is flattish compared to the February month inflation data. So, what is our view on the overall market? So we believe that even though the domestic markets conditions have been improving over the past few days, given the interest rate cuts, appreciation in rupees, FIS buying and dollar index weakening, we believe there are certain global uncertainties still persist uh, due to the tariff hikes, weakness in the European markets, and corporate style cost cutting in the US, uh, which we saw that there have been some backlash happening in the US due to the job cuts in the government. So the US have been aggressively trying to improve its balance sheet through this tariff hikes and cost cuttings. So these are certain uncertainties which we believe might impact the Indian markets as well. So in the short term, we believe there should be the volatility in the market and volatility present in the market. So this the ups and downs gives us the opportunity to improvise a portfolio, that if we have bought certain stocks at a very high value, we can buy this good stocks at low values and average out a portfolio. So this is we believe that this is the right time to invest, and we can do stock SIPs as well on certain stocks, like buy on dips, which is the most favorable strategy. Like if you want to invest like certain amount in a particular stock, we can break it down. Like let's say we want to invest 50,000, we can invest 5,000 or 10,000 in various tranches. If the market corrects, like let's say we believe if the market corrects, or if our watch list stock corrects by 5 to 10%, then we invest a certain amount. The next dip In the next dip we invest certain amount, or in the next price we invest certain amount. So this averages out our portfolio and helps us create a wealth in the longer run. So as I mentioned, we can do stock SIPs. So these are few of the stocks which at GEPL Capital we have jotted down for our clients. So we have 3 portfolios. So the first is conservative, the next is moderate, and the third is aggressive. Each have a different portfolio style. So the first is conservative. So in the conservative style, we completely focus on large cap stocks. These are for investors that are looking for longer run wealth creation, and those who cannot take risk and avoid taking risk in the market, and avoid companies that are too volatile and that might impact their portfolio. So for such investors, we are recommending conservative portfolio. Stocks include HDFC Bank, Reliance Industries, ICICI Bank, Bharti Airtel, and Larsen Toubro. So the next portfolio is a moderate portfolio, which which is for our moderate investors who has was in which we look for 60% of large cap, 60% of mid cap, and 40% of large cap. These are for investors who wants to take a good amount of risk and who are risk, I would say, who wants to take a bit moderate amount of risk. So for such investors, we are recommending moderate portfolio, who does not want to take extreme risks and who does not want to miss the opportunities in the mid cap sector. So for such investors, we are recommending moderate portfolio. So companies such as Max Healthcare, Indian Hotels, Federal Bank, Bharti Airtel, and ICICI Bank are some of the stocks which we have jotted down for our moderate investors. And the last portfolio is the aggressive portfolio. These are the stocks for the investor who wants to aggressively invest in the stock markets and who does not concern about the volatility in the market. For such investors, we are recommending Max Healthcare, TDSL, Indian Hotels, Blue Star, Federal Bank. This consists of 60% mid cap and 40% small cap. So these are our aggressive stocks as well. So we believe we can give this stock SIP portfolio to our investors, to our clients to invest in. So that's all from our side, my side, on the fundamental take on the market. And these were my key highlights and key updates on the market and market future outlook. So thank you.